Good morning and welcome to the B.F. Anderson Technical Report for March 17th. I wanted to get right into the charts. One of the indicators that I keep an eye on is the New York Stock Exchange new 52-week lows. Now you can see here back in prior dates we've seen major spikes in this number, and I've drawn a line across here. What we look for is we don't like to see a lot of days where the number of new lows are exceeding 40 a day. So you can see here since really about the beginning of the year, there has been very few days where we've been over 40. But notice here lately, we've been seeing, quite a few new lows. In fact, we actually hit over 100 new lows here recently. This is a yellow flag. It's just kind of telling you that the boat may be leaking a little bit here, and it would be just would be a good time to be a little bit more cautious. Now, yesterday we only had 25 new lows, and the day before that we only had 28. So maybe this indicator settles down. I would keep an eye on this. Now, the other yellow flag out there that I'm concerned about is weakness in the small cap stocks, measured here by the Russell 2000 Small Cap Index. Now, recently the index broke the 50-day moving average, and the reason this is important is the NASDAQ and the S&P and the New York Composite, they're all still above their 50-day moving average. So maybe this little correction in small caps is now over. We've stayed in the consolidation box, so it's just a yellow flag, another yellow flag. We did bounce back the last couple of days. We did bounce back above the 50-day, and we're approaching the 25-day. Now, I just kind of wanted to go back in history a little bit. This was the major rally that took place starting in 1997, 1998, and you can see that the NASDAQ climbed from approximately 1,200 all the way up to 5,000. Then we had the bubble. Now, a lot of investors that were not normally investing in the stock market came in up here. So then we had the bubble popped, we had the dot-com bear market, and you can see what happened. But over the last 17 years, the NASDAQ has pretty much not done a whole lot, but we have just now broken out above where we were 17 years ago. So this is like a lot of people are saying, well, this is frothy, this is, too much going on. Well, look, we're just now getting above the level set back in 2000. Now, after mentioning that small caps were looking kind of iffy, let's look at some large caps, because a lot of large cap stocks look good right now. Now, here's Apple. Apple is breaking out of a trading range. Now, one thing about technical analysis and trend following is you also look for patterns. This is a nice pattern. This is called a cup pattern. You had a handle, what you call a handle here, and then the stock is broken out. So Apple looks good. Amazon acting real well. Again, you see the same pattern. You got the cup. Now we've got the handle. Now what would be really interesting is if Amazon can break 860, which would be a breakout. And the latest reports I'm hearing is that Amazon could be the first $1 trillion company. Apple may be the first $1 trillion company. These are really big companies that are doing quite well. Here's another stock that's a large cap doing well called Salesforce.com. They're real big into big data. They're real big into cloud computing. Also, here's Google. Google is in a nice uptrend. Looks fine to me. Another large cap that's doing quite well with home renovations is Home Depot. Continues to make new highs. Now, here's an interesting stock. This is a company called Netflix. We all probably have heard of Netflix. Again, you've got this nice uptrend with a very long base here, and the stock is just kind of now breaking out of this base. Now, it pulled back yesterday, but this morning, Bernstein came out and raised their rating on the stock to outperform, saying that the video streaming subscription model was the superior way to go, and that Netflix was the anchor of that model. Now, the thing that Netflix is doing, they're spending quite a bit of money on new programming, their own in-house programming, and it's quite good. My wife and I watch Netflix programs on a regular basis, and they're quite good. They're doing real well in Germany, and they're also doing real well in India. Now, here's another large cap I think is interesting, a company called Priceline. Now, what's interesting about Priceline is, look how nice that uptrend is. We're talking about a stock that trades at roughly $1,800 a share. I have never run into anybody that has said that they own Priceline. So, it's because it's an $1,800 stock, but you have to realize you need to look at market cap. That's what matters. Market cap tells you more. So if you have any questions, give me a call. Thank you.